All right, so you mentioned there are a couple options at the end of the lease that the customers might be able to do. What would those look like and what could those be?
Yeah, sure. So at the end of the tax-deductible lease that we talked about, the IRS actually requires that we give the client a couple of different options. The first option is that they can purchase that building from Compeer. We need to transfer that ownership from Compeer back to the client. The second option is that they can purchase the building. It's called a buyout or residual, that purchase option. And they can renew it out over a little bit longer period of time, out over another year, 2 years. And then there's a smaller transfer residual at the end of that. And then the third option that they have is kind of a crazy option. Nobody ever does this, but it certainly is an option and it certainly has happened. And that is that once they go through that renewal process, they get down to that small transfer residual, they can actually take the building down and send it back to us. So obviously nobody really takes their nice FBI building down and sends it back to us, but they have that option. So typically a couple of months before the end of the term, they'll get a letter from Compeer that says, hey, you're nearing the end of the lease. These are your options. Tell us what you'd like to do. Now, what's kind of interesting about that additionally is that the lease has some really nice estate planning benefits that can occur at that time. So obviously the original borrower, we call that a lessee, they have the first option to purchase that building and own it, but they don't have to be the one that does that. So maybe they have children that have come back into their farming operation or working their way into the farming operation. Maybe they've created a trust or an LLC or some other type of vehicle to move the assets on their farm side through. And the lease really allows them to do some estate planning for that. So that original lessee has the first option to purchase it, but they don't have to be the one that does. So their kids could purchase it, their trust could purchase it, and that transfers that asset through to a different entity without any gifting or inheritance taxes. So I have a lot of clients, particularly in multi-generational farm setups, that's a very attractive tool. Doesn't fit for everybody, but for the right client, it's really a nice advantage to think about from an estate planning tool.